If you believe Bitcoin is going to go up at really it's about greater than a 10% CAGR into the future, the math will show that if you have amplification on through preferred equity for Strive and Strategy, it just mathematically will outperform Bitcoin over time.
Actually, I'd love to get your reaction on the Michael Saylor and Danny Knowles conversation recently. What's your take on this?
My take is every company should own Bitcoin, just like every individual should own Bitcoin. My response to that is that I think Bitcoin's the most valuable asset known to man. It's a decentralized asset, and if you've created something that is truly scarce, truly valuable in a world of abundance, everybody's going to want it.
Hi everyone and welcome back to Stephan Livera podcast. Today we're going to be talking about Strive and digital credit and Bitcoin treasury companies. Joining me today is Matt Cole. Matt is the CEO and chairman of Strive. And, Matt and I have been chatting kind of whenever there's a conference on, we end up chatting, and I've always found it really interesting and very intelligent commentary, and excited to chat with you. So first off, welcome to the show, Matt.
Thanks. It's been a long time. Thanks for having me, Stephan.
So obviously the big news for you guys is you just, I believe the shareholders just approved this merger of Strive and Semler, creating a new large entity with, about 12,798 BTC that you have. Last I checked on the dashboard, it's 14th of January, 2026. So give us a quick overview. What happened here, and what's the plan there?
So we've been public for about 4 months. And in Bitcoin terms, it feels like we've been public for 4 years, right? I mean, and it's easy to forget that. It's like, where were we as Strive 4 months ago? Where were we as Strive a year ago? It's January 2026. January 2025, we hadn't even found a company to reverse merge into to become public yet. We hadn't found asset entities one year ago. It was also about 1 year ago that I met Ben Workman, I met Jeff Walton, met all these guys, met Tim Kotzman, right? This has happened so quickly. So, I mean, those introductions happened in January. We found asset entities and a target in February last year. We announced that we're doing a reverse merger with asset entities May of last year, right? So call it like 9 months ago, we announced that we're becoming a publicly traded Bitcoin treasury company. About 4 months ago, we actually became public. 1 week after becoming public, we had an opportunity to announce an acquisition of Semler, who is the second U.S. publicly traded Bitcoin treasury company. Then in November, so just a couple months ago, we launched SATA. So we were the second U.S. company to launch preferred equity after Strategy. The first one that had no debt, which is a topic to discuss now because Semler does have debt, right? So we'll get into that, I'm sure. And we announced plans to retire that within 12 months and kind of talk about how we're thinking about doing that as well. And it's January of this year. So this has all happened extremely quickly. When we became public, we had less than 6,000 Bitcoin just 4 months ago. Pro forma post Semler, which Semler will close in a couple days, we'll officially have over 12,000 Bitcoin. So more than doubling our Bitcoin stack in under 4 months. Also, if you look at it, but the goal is not just to double our stack, right? What are our goals? Our goals are actually to generate a Bitcoin yield, right? So that's really how you have to look at these SATA, how you have to look at the Semler acquisition is, did this actually generate a good Bitcoin yield for our investors, right? Because that's what we're trying to drive here. And then over the long run, outperform Bitcoin, which ASST has actually outperformed Bitcoin pretty healthily. You can see it on our dashboard since we announced at Strategy World the strategy. So we have a live tracker of the Bitcoin standard era, and you can see we've outperformed Bitcoin. But the goal is to outperform it over the long run, right? Not over any 9-month period, but over any couple multi-year period. But then on a year-to-year basis, generate Bitcoin yield. So how are we doing? If you look at the fourth quarter of 2025, we generated a double-digit Bitcoin yield. And so this is after we bought our initial Bitcoin, driven primarily by the launch of SATA. But if you compare this to the industry, the fourth quarter was a very challenging quarter, right? Bitcoin was down. Most companies had flat to negative Bitcoin yields, a few eked out small Bitcoin yields. And Strive had a double-digit Bitcoin yield. So we were among the leaders, if not the leader, in driving Bitcoin yield amongst industry in Q4. Then you go Q1. Well, obviously Q1, we're 2 weeks into Q1, so it's very early. But Strategy I think has like a 0.1 Bitcoin yield. They've been stacking a ton of Bitcoin. I mean, kudos to them for how much Bitcoin they've stacked. It's been only mildly accretive in Bitcoin yield terms. Post Semler, we announced yesterday that we anticipate having a greater than 15% Bitcoin yield in January of this year. So again, Strive is moving towards the top of the leaderboard in Bitcoin yield metrics since we've been public. So I'm just very proud of the success that the Strive team has driven. And it filters through in things that are lesser understood that, I think from a institutional story, and we'll get into the institutional story of Strive, why we decided to do a reverse split, which is really institutional plumbing in my view, but happy to kind of go in depth on that. But what do institutions want to see? They want to see a healthy market cap. So we now post Semler will have over 12,000 Bitcoin, well over $1 billion of Bitcoin. Currently trading at a slight premium. So, we're a $1 billion company, right? And, I know money's being debased all the time, but, they call that a unicorn company, right? Like not a lot of companies become a $1 billion company. What do they also want to see? They want to see liquidity. So if you actually look at the liquidity of our stock and the liquidity of SATA, so I'll focus on the stock for a moment. One of the challenges in the Bitcoin treasury space is a lot of the Bitcoin treasury companies have really bad liquidity. And I think it's still early, right? Like they have Bitcoin, they have time to figure it out. They're at different places in their strategy. But if you look at basically people besides Strategy, besides Metaplanet, and you look at Strive relative to peers, I mean, we're like on certain metrics more liquid than like our 10 closest peers combined. So it's not like number one, number two, number three. It's like divide Strive by 10, and then you're getting like the average of most of our peers. And so we have a lot of liquidity, which drives institutional interest. Why does that drive institutional interest? Because institutions don't buy, 500,000 shares, right? They're buying 10 million, 50 million, 100 million chunks.
They want to be able to enter in size without moving the price.
Yeah, exactly.
Or leave in size without moving the price, right?
Yeah, and so when I was at CalPERS, and most people know this by now, but managing a $70 billion bond portfolio, you needed liquidity. Like you couldn't get a position that you couldn't get out of, and that's a problem that a lot of the peers have. We don't have that problem. And then the last problem is just more of a plumbing problem. A lot of institutions also have minimum price thresholds. Some of them are $3, some of them are $5, some of them are $7, and these are minimums, right? So like, let's say someone has a $7 minimum price threshold. If you are at $7.25, they're not going to invest in you. Or if you're Amplified Bitcoin, you look at the vol of Bitcoin and you're $10 a share, they're still going to be pretty hesitant to invest in you because they're worried that you might fall under that threshold and then they become a forced seller, right? And so it was the one thing that was missing for us to really open the doors to the institutions to ultimately drive, what we think will be a further leading Bitcoin yield. Is really just a plumbing problem for us. But I think it's really, we're just getting started. It's obviously very, like I said, 4 months into this, but it's pretty amazing how much has been accomplished in a short period of time.
Yeah, it's really interesting to see how quickly everything has shifted, as you said, like this merger, arguably the first, merger or acquisition between treasury companies. Now, I think, I guess you were touching on the stock split aspect of it, because I guess, as I'm understanding, you want to be above a certain threshold because, again, part of the play here is to be accessible to these different pools of capital. You want to be open to them putting the money in, obviously, to attract the money in. And I guess the other thing I was really keen to ask about is the debt aspect, because I know you've spoken about how that's been a key differentiator for you with Strive to say, hey, we've got SATA and we have no debt. But now with the Semler acquisition, as I believe, I was looking it up, you tell me the exact number, but I believe it's in the ballpark of 120 million. And I believe
That's exactly
just for okay, yeah, and I believe your market cap is, as we speak, about 952 million. Your Bitcoin stack is worth about 1.25 billion. And so that's kind of, these are the numbers we're looking at right now. So what's the plan going forward on trying to get rid of that debt, or what's the plan there?
Yeah, so there's several different options, and all of them are on the table. But what do I think would be the best option, and something that I think is executable. We hinted at this in our press release when we talked about how Strive might issue a lot more SATA in the near future. Is we want to have amplified Bitcoin exposure. In the last presentation we had on ASST and SATA update, we talked about having amplification of 25% plus. We showed an amplification chart that really gets into one of the things that I think Adam Livingston explains really well, which is the compounding effect of amplification over time, right? Like interest and total returns compound, right? So if you outperform Bitcoin in 1 year by 10%, that's great, but it's kind of interesting, not really. But if you're doing something like that year after year after year or more, right, over the course of 10 years, it becomes extremely meaningful. We put in a box what it would look like at 30% amplification, 40% amplification, 50% amplification. Obviously, all those are greater than 25%. And, these are very dynamic conversations of like where we might go in those sorts of range. But we want to provide great amplified Bitcoin exposure, no debt. And so we announced intentions to retire. So Semler has two forms of debt right now. They have a $100 million convertible note, and then they have a $20 million Coinbase loan that they took out when they had a settlement with the DOJ around their operating business. Okay, so we have, call it, almost $1.2 billion of Bitcoin. About 10% of that, Semler has some debt that we got to take out. So the easiest and I think cleanest way, and this is going to be dependent on market conditions, would be to issue more SATA to pay that debt off, right? Then you have kept your amplification ratio up, because if you just retired the debt, let's just say you had cash to retire it, or you sold a little bit of Bitcoin to retire it, then the initial SATA that we raised, the $200 million notional, as a percentage of the overall Bitcoin stack is less amplification, right? Which we want more amplification. And so if we want more amplification, then a use of proceeds for a SATA raise would be to retire that debt. I think, these things are dynamic conversations. They depend on market conditions and many factors, but I think that would be the cleanest way. But if we had to do it different ways, we have a $1.2 billion balance sheet. We have a premium to our Bitcoin NAV currently that, post the transaction that we could consider, using to pay it off. But I think these are dynamic conversations. Where do we want to go? How we do it? There's certain ways that are better than others, but where we want to go is, amplification greater than 25% and no debt. And then ultimately also monetize the Semler business within 12 months. So just a clean story. That challenge or that operational, work that we have to do, that is the cost of generating a 15% Bitcoin yield. Like nothing comes free.
Of course,
the question is that 15% Bitcoin yield when basically no one has any yield, strategy has 0.1%. Is that difference worth that effort? What I just talked about, do we think executable? And the answer to that we believe is absolutely yes. So now that's what we'll be focused on in the near term.
Yeah, and when you say monetize, do you mean they're like actually sell off? Like you may sell off or spin off the Semler medical business, but obviously keeping Joe and Eric on board?
Yes. Yeah. So Joe will be part of our Bitcoin operations. So he'll be, working primarily with myself, Ben Workman, Jeff Walton, doing a lot of the things that Joe has. You can never have enough podcasters per share. So we brought Joe in. He's a great add to our team, right? So he'll be part of the full-time Strive team. And then Eric Semler's joining the board. He'll be an independent board member. So he was the chairman of Semler. He'll be an independent board member for Strive. And that's another one of the plumbing things as we grow is you need, more independent board members. And so he slots in as a great independent board member, someone that was a visionary, obviously launching the second U.S. publicly traded Bitcoin treasury company, obviously a massive supporter of Bitcoin. And then when it comes to the Semler operating business, so what are the plans there? Here's what I can tell you at this point. So we've given a high level overview of a bigger vision. So this is not the day jobs or the focal point of myself or Workman or Walton. That's going to be on the Bitcoin side of the equation. But having a small team of people around Strive focused on giving that healthcare business a broader mandate. So what does that healthcare business even do? It's around preventative healthcare. So it's about, can you find, a problem for them with their heart early detection, right? And a lot of people in our generation are really about preventative healthcare. They're not about, it's like the whole MAHA movement, right? That you don't wait till you get sick, you don't wait till you get cancer and then go to the doctor and treat the cancer. It's much better to prevent having those bad health outcomes by being healthy and taking preventative steps to your healthcare. So we think that that's a business movement into the future that has a lot of momentum behind it, preventative healthcare, and that will only continue in the age of AI. It'll only get better in the age of AI. And so the Semler product's actually a good product. So the question is, can we leverage our co-founder Vivek Ramaswamy, who has a background in biotech and healthcare, one of our board members, Ovik Roy, maybe bring in another person or two and kind of create a small team that's focused on actually giving that business a broader mandate. So not shutting it down, right? But giving it a broader mandate. So they have one product. So what if it was a holding company of a bunch of different products or something like that? And then that spins off and is its own thing, and ultimately is not part of Strive. But how it ultimately is monetized, is TBD. Is it possible that Strive has a minority stake in that, depending on how these are negotiated? Possibly. Is it possible that it's a complete spin out? Yes. These are things that are unknown. But that's the direction it's going. That it won't stay under Strive over the long run. We don't think it's core to our mission as a Bitcoin treasury company, and we want to stay focused on that to the maximal degree. But we also have a fiduciary duty to our shareholders to not take an asset and just completely discard it. Like we have to maximize value with that asset. And this is how we think we maximize value with the asset. We put a 12-month window on it because we don't want this to be something that's lingering forever, right? So we message we'll do this within 12 months, or the intentions are. And then ultimately, we're focused on what everybody knows.
On the Bitcoin side of things, yeah. Now, as you were saying around the Bitcoin yield conversation, obviously that's an important factor for any Bitcoin treasury company. Is it fair to say this would be kind of like doing an acquisition like this is sort of like a lumpy move that you can't necessarily do that? You're not necessarily going to do that every quarter, right? Like it's kind of like this is maybe, I guess, the way I'm understanding it, and you tell me, but I'm understanding it like the idea is that you've got this engine churning, you've got SATA, the preferred share, to kind of keep, providing, that is like a product out there that you can kind of regularly get some yield out of that. And occasionally you're going to get these M&A opportunities. That's like a lumpy kind of chunk that you're going to get. And then that's I guess one way to conceptualize what you're doing. Or how would you react to that? Or is that accurate? Or how would you say that?
Yes, I think at this point for Strive, having SATA already out there, now having north of $1 billion of Bitcoin, over 12,000 Bitcoin, we don't have to do another acquisition ever. We have the engine churning to generate what we think will be a leading Bitcoin yield with the volumes and the market cap. Like we think we're big enough. If there's a win-win, of course we're open to additional M&A opportunities. But to your point, how do you think about them? So you think about when we announced Semler to when it closed, it was about a 4-month period, right? The average M&A transaction takes about 6 months. And so realistically, like you're talking about on a given year that you might have one, like if it was an insane year, maybe 2 acquisitions. And I mean, just for reference, I mean, we did a reverse merger into asset entities in 2025, and then in which is a merger, right? And then in January 2026, we took over another company. So, within 12 months, we have done 2 acquisitions of 2 companies, right? So that is possible. But, when you're in the midst of a transaction, you can't even have the next conversations with the next companies. So like it's, at this point, Semler will close in the near future. And then we could consider like, is there win-wins? We're definitely open to it. I mean, you look at some of the peers in the space that don't have great volumes, that are trading at discounts to NAV, and that probably don't have enough Bitcoin to actually issue digital credit. Because we've talked about this before publicly, but when we launched SATA, so we did $200 million notional, we started with an IPO size of 125. And one of the interesting learnings from that is we thought 125 was kind of like the minimum size to actually do an IPO. But our order book was actually kind of weak at 125, and it was 2 times oversubscribed at 200 million. And even at 200 million, many of the institutions said it's too small for us, and so they ended up passing. And so what I believe is that for most, unless liquidity conditions are just so loose, that 200 million is probably about the minimum size. And so you take a $200 million notional raise, for most people that issue their first digital credit, it's going to be at a discount. Strategy's first one was priced at 80. Our first one was priced at 80. So you look at that and you say, okay, like how many people down the list? And then you also say, like, when you issue your first one, people are going to want, not to have you push beyond certain amplification ratios. So like probably 25% is probably the max that you can go at the start there. And so you start to go down that list and you're like, okay, actually, like when Strive did that, we were kind of like the minimum size to do that. And it was like, whatever, 5,700 Bitcoin or something like that. So you're like, who has that? There's not a lot of players.
There's not that many potential people who can do it, right?
Yeah. And then you look on that list also and you say, okay, well, some of them, they did SPACs, which a SPAC, when they IPO, they have to wait 12 months to have a shelf registration. So they can't do a public preferred equity until 12 months after their IPO. And so then you start to narrow that list more and more. And some of them obviously have other debt terms already. And so it's almost, there's very few players outside of Strive, Strategy, and Metaplanet that can actually issue digital credit. Do I think we'll see a couple? Yeah, but it's not like all of them are going to issue a preferred equity publicly traded this year. It's just I don't think that's possible. And so for some of them that are believers in digital credit, could it make sense to team up with Strive and kind of press the go button together? It's possible. Will it happen? I think it remains to be seen. I think it just has to be, these things have to be win-wins, right? Like it has to be a win for their shareholders. It has to be a win for Strive. We're definitely open to it, but I would say I wouldn't forecast at this point that it'll happen. But I would say, like, if you were to see consolidation in the space, I do think that Strive is the leading candidate for further consolidation. You look at Strategy, it's not material for them. I mean, they buy
Right.
10,000
And Michael's
Bitcoin.
mentioned they're not as interested in that as well.
Yeah. So I think Strategy could be in a very, very rare instance, but I think it's pretty unlikely, especially in the next couple of years, that they would do it. Metaplanet's a Japanese company, so how many for a Japanese company to acquire American companies, that has its whole host of additional complexities. Then you start going down the list and you just say, okay, like it's probably Strive is the most likely continued consolidator in the space, to the extent that continued consolidation happens. But we'll see. So that's the high level of it. And
one other topic on the acquisition I think would be interesting is, as you mentioned, making it win-win. I think people will want to understand, okay, well, what's the price you're paying and how are you funding it, right? Because as I understand, this was an all equity deal. So can you maybe articulate a little bit on how you get both shareholders on side, both sets of shareholders on side there, to feel like, hey, we're getting a deal here, we're getting a decent offer here, such that they will then approve. Now, in your case, they did approve it, but if you could just explain a bit there on the structuring of the deal and the pricing and how is it paid for?
Yeah, so I think all stock is the cleanest way to do this. It 100% is the cleanest way to do it. We're on the Bitcoin standard. We don't want to be using cash for acquisitions. So it probably would have to be all stock or majority all stock. For Strive, I think the question when you come to win-win is, what is the value proposition that each side is bringing, right? So Strive brings size, we bring digital credit, we bring liquidity, and we bring, who knows, but typically one of the leading mNAVs in the space. That's how we've typically traded since we've IPO'd, one of the higher mNAVs. And so those are the things that we bring. And then everybody else, it's a case-by-case basis, right? Some people have more than just Bitcoin. Some people don't. Some people have bad liabilities, right? So for it to likely work out, it probably would have to be an accretive yield deal for Strive, where the Bitcoin accretion is there. But if there's a difference in mNAVs and ability to drive amplification ratio, you can easily start to do the math and say, okay, for one of these other companies, you look at it on a 3 or 5 year basis with the amplification that Strive can bring, the clean balance sheet, the liquidity, and you say, is this better, especially if you're trading at like a, at 0.85 or 0.8 or 0.7
Right. Discount to
mNAV to say,
1x, yeah.
and can Strive kind of like meet you in the middle somewhere, right? Give you an increase and then also provide amplification that you're unable to get yourself. The answer is yes, but different investors will have different views on their side if that's accretive. On our side, Strive is a controlled company, so we have a group. So myself, our co-founder Vivek Ramaswamy, our CFO Ben Pham, our chief legal officer Logan Byrne. We have a group together, and that group controls greater than 50% of the voting power, and so we can move very quickly. So that's why you didn't see us have to hold a shareholder meeting. Like when we announced the deal, Strive had already approved it with Semler. Right, it was fast, and so that's one of the other things that we can bring. Where Semler had to go to their shareholders, and look, the shareholders were very rational. Over 90% voted in favor of it. ISS and Glass Lewis, the two proxy advisors, they both recommended in favor of it, and so it had vast support. Right, like I mean that's great support to get over 90% for a transaction. And I think some people on X didn't fully understand, like, would it have support, would it not have support. But institutional investors and proxy advisors, they're able to do their work. They're able to see these things that I'm talking about, this institutional story that Strive brings that others are struggling. And I think the fact that they were in favor of it and it got the support it does show a path for this to be done in the future.
Gotcha. Now, another interesting one is this whole, now this has been a big kind of bone of contention amongst, let's say, Bitcoin people online about like mNAVs and so on. So, maybe we're kind of getting into a bit of like what happened with Michael Saylor and Danny Knowles a little bit. But even amongst, let's say, the Bitcoin people who are bearish on treasury companies, some of them are saying, well, hey, what if some of these companies, their mNAV goes down below 1 and then they can't get it back up above and they don't have an engine to keep going on these. I'm curious, how are you seeing this? Is it sort of a cyclical thing? Is it also like, Bitcoin bear and bull markets obviously will matter. Can you explain a little bit of your thoughts on like how people should like consider this mNAV question? Because it seems a very confusing thing. Because look, to be fair, a lot of this is very early, and people sort of need to see it play out a little bit. But how would you explain it for somebody when one of these companies is at a discount to mNAV?
Yeah, so I think it's really a case by case basis. So should any company that buys Bitcoin trade at a premium to their Bitcoin holdings? I think the answer to that's no. It's like, does any company that has cash, should they trade at a premium to their cash, or if they had gold or whatever, right? Like the answer is no. The question becomes, what is the company doing? And I think one of the things that sometimes can be confusing to people, but it's actually pretty simple, is like, ultimately, what are you trying to do? You're trying to drive a total return, and a total return that's greater than Bitcoin. And so the question becomes, is the company doing something that is likely by the market standard to drive a better total return than Bitcoin over time, and also doing something that an individual couldn't do on their own, or a hedge fund couldn't do on their own? And if the answer to those things is yes, then I think it's worth more than the Bitcoin. If the answer to those things is no, or maybe it's worth around the value of the Bitcoin. If the answer is no, it's probably worth less. And so I think the question then comes down to math. And what is your probabilistic outcome into the future of Bitcoin? And this is where I think a lot of the OG Bitcoiners that are massive Bitcoin bulls, their argument really breaks down for specifically issuers of digital credit like Strategy and Strive. Because if you have amplification through digital credit, you have not encumbered your Bitcoin, and you have a cash reserve set aside to cover interest payments, then you cannot be liquidated. And I think that is misunderstood. Sometimes you see people, well, I can, go on Coinbase, or I can go on my account and I can put leverage on, and I can post margin and I can put leverage on. And it says, okay, what happens if Bitcoin has a flash crash overnight, or for a day, or for a week, or for a month? You're liquidated. You've lost your stack, right? What happens for Strive? I mean, literally, and this is like a crazy scenario, but like Bitcoin could go to a penny, and Adam Back would buy all the Bitcoin, I think. But let's just pretend that he didn't have that bid in there, and it went to a penny. and it sat there for a year. Strive could do nothing. We could wait. In that like crazy tell scenario, let's say it went beyond a year, we could then pause interest payments. We could wait for multiple years for it to recover. So the question becomes, if you believe Bitcoin is going to go up at really, it's about greater than a 10% CAGR into the future, the math will show that if you have amplification on through preferred equity for Strive and Strategy, it just mathematically will outperform Bitcoin over time. And so the question becomes, how much better is the amplification through preferred equity than traditional leverage? I think when you talk about a hyper volatile asset like Bitcoin, it is so valuable that leverage outside of the ability to not be liquidated is almost just a bad idea in all instances. And so I think if you want leverage, I think amplified Bitcoin through prefs is like it's by order of magnitude the way to go. And so if you believe that, and I believe that, and you also believe Bitcoin's going to have a CAGR over the next 10 years north of 10%, we can all debate where we think it is. You know, I think it's probably around 25, 30%, but whatever, do your own math. Sometimes I feel like I'm too bearish when I say that. But you know, do your own math, and it just mathematically outperforms in a way that's not replicatable elsewhere, and that there's also very few players that are doing it. So like if you want amplification around 30%, Strive is the best game in town. Strategy is actually under levered. That's kind of their problem in a sense, is that they're so big. Their problem is not that they're going to go out of business. I'm like the ultimate strategy bull, but the hardest thing that they have is that they have over 600,000 Bitcoin, and they have to amplify that through preferred equity. So Saylor has to go out there and sell more and more and more preferred equity and grow that market. And it's I think digital credit for people that want income's like an amazing product, and I think he'll be able to do it, but that's a multi-year project, right? So in multi-years, once he's done that, what's the price of Bitcoin? Well, Strive already has that amplification on, right? So really, again, we're talking about total return differential into the future, right? Like who's going to be able to drive the best total return? Then how does that filter back into an mNAV? Like the reality is, I think the mNAV should be substantially greater than 1. But let's just say it's 1. Like, let's just play that out. If you already have digital credit on, you already have the amplification on, then you're just going to outperform Bitcoin, even if it stays at a 1 mNAV, because your NAV will rise faster than Bitcoin because you have amplification on as it goes up. So does it break? It doesn't break. You would still outperform. And so I think it just ultimately comes down to, you know, the market kind of figuring out how to best value these companies in a space that's moving exponentially, right? It's easy to forget that Strategy launched their first pref less than a year ago. We talked about our timeline, right? How fast all these things are moving, and mNAVs are all over the place as people are trying to figure out, you know, what the proper mNAV is. I would say at this point, players like Strive and Strategy can be agnostic on it, but also I think that the mNAVs are probably lower right now than they should be.
Yeah, I think it's a good summary, because I think I agree with you on most of that. That really, it's, do you believe some Bitcoin treasury companies can justify a premium? I believe the answer is yes. It depends on the conditions, but yes, it can. You know, they can justify a premium based on some of these things like their leverage or amplification. And so I guess, and it's a really interesting point you make about, let's say in the academic case, like let's kind of assume away some of the risk factors. Obviously, not your keys, not your coins. Understand that holding Bitcoin is a different thing to holding equity. But assuming even just 1x mNAV, just the pure factor of having leverage, or in this case, sorry, I should use the term amplification in this case, you are outperforming Bitcoin just at least on the financial, you know, NGU side of things. Of course, you know, I want to be clear, everyone, you know, shouldn't take that as like, oh, Stephan is endorsing only holding, you know, equity of a treasury company instead of holding Bitcoin. Of course, I think you should hold Bitcoin. I see it as, you know.
So do I, just for the record.
Yeah, because I think people get confused into thinking it's like an all or nothing thing. Whereas the way I'm at least understanding it, and again, no financial advice, this is just educational. The way I think about it is I keep, you know, most of my, you know, Bitcoin cold storage, multi-sig, and, you know, treasury companies are like a dabbling. That, you know, it's a small fraction is how, at least how I think of it. So I'm not saying, yeah, guys, just go all in on treasury companies. No, that's not how that's not how I see it. But I think it's a common depending on who your audience is in Bitcoin, it's sort of like there's all this kind of purity testing and kind of virtue signaling, and maybe some of that is, probably a natural spot. Actually, I'd love to get your reaction on the Michael Saylor and Danny Knowles conversation recently, where I think, essentially Danny was trying to ask this question of like, oh, how does it change if, you strategy have put out preferred shares? What does that mean for the other guys, and how many treasury companies can there be? What's your take on this?
Yeah, my take is every company should own Bitcoin, just like every individual should own Bitcoin. Every nation state should own Bitcoin. And I think that sometimes some of the Bitcoin purists don't like that. They don't like the idea of companies holding Bitcoin or nation states holding Bitcoin. My response to that is that I think Bitcoin's the most valuable asset known to man. It's a decentralized asset. And if you've created something that is truly scarce, truly valuable in a world of abundance, everybody's going to want it. There's going to be a race for it. And if it's not truly valuable, then no one will want it, or only libertarians will own it. And I'll say, like, I'm, used to be a card carrying libertarian. I have very libertarian ideals, but like, if only libertarians want your thing, it's not very valuable, right? But if it's super valuable, then everybody wants it, and you can't control that, right? And I think that's what Bitcoin is showing, is that nation states want it, companies want it, and growing companies, more and more companies, more and more nations, and people want it. And so, I think from the perspective of how many companies should have a Bitcoin treasury, everyone, just like how I would say to all my friends, you should own Bitcoin. And I think that's where it gets into the, are we competing with each other question, which, Saylor got very, very contentious, right? And I probably have a little bit different of a nuanced take on that, where I'm extremely competitive. And if I go golfing with my friends, I want to beat them. If I go work out with my friends, I want to lift more weight than them. I think what's true is that in the Bitcoin treasury space, there's a lot of friendly competition. I think it is competition. We are trying to drive a better total return than every other competitor in the space. We're not trying to get more Bitcoin than strategy. That's a silly proposition. Never going to happen. I guess there's probably some like 0.001% tell chance that it happens, but like it's not going to happen, right? Under any reasonable view of the world. But do I think that we can drive better total returns? Yes. And do we want to? Yes. Do I also like we passed, or we're going to pass this week on the Bitcoin rankings, Tesla, DJT, and Block. So, Jack Dorsey, Elon Musk, and Donald Trump's companies. How would I feel if tomorrow I wake up and Elon doubled his Bitcoin stack in Tesla? I'd actually be happy. So but then I would want to repass him, right? Like it's a competition, but we're not competing in the sense that we can all win because of how nascent and how new this industry is, right? As Bitcoin treasury companies. So it's kind of like pure play issuers of digital credit. Is there competition? Yes. Can we all win together? Yes. Do you win more? Do you win more by actually working as an industry, educating others? Like I don't want to see in any way, sense of the form, even beyond the fact that I'm friends with, a lot of the C-suite of strategy, just as a business, I don't want to see strategy not succeed. And they don't want to see us not succeed, because if SATA blew up, that's bad for them as an issuer of digital credit, that the only other US issuer of digital credit blows up. They don't want to see that, right? So that's in the sense how it's not competing. Is Michael Saylor competitive? Yeah, that guy's a shark. That guy is an absolute shark. He's a crusher, right? So I think it's important to say like how and where is it competitive? And I would say it's friendly competition. Just like how imagine you're in the NBA. If you're an NBA player, do you want the NBA to be the place of all the best basketball players in the world? If you're a player, if you're a team, you do. You want the competition level to be extremely high, because that's going to drive viewership, that's going to drive interest, right? But do you also want to win? Yes, right? And I think that's kind of the way I see this in the space, and why we go to the Bitcoin for Corporations events. Saylor's super generous with his time. I try to be generous with my time when I can help others succeed, and why I actually want to see them succeed, right? It's like, yes, it's competitive, and yes, I want you to succeed. And yes, I think it's a good thing for the Bitcoin industry to have more Bitcoin treasury companies. And the last thing I'll say about this is that one Bitcoin treasury company can't do everything. And I could think of at least 10 distinct, unique opportunities for different pure play Bitcoin treasury companies. And then broader than that, I think every company should have Bitcoin on their balance sheet.
Gotcha. And so I think part of the contention, let's say, amongst like some of the Bitcoiners who are against treasury companies. Now, again, I'm obviously more in the pro treasury company side, but I think what I seem to see is people who are saying, well, you should be doing it. You should be stacking Bitcoin out of your operational company income, not out of quote unquote financial engineering, because they see that as like, you're just trying to spin up some zombie company and get rich out of that. You should do it the hard way. And, I'm curious, like, okay, yes, every company should hold Bitcoin, but the question then would be, should every company engage in financial engineering? How do you see that?
I partially agree with the statement. So I think the question comes back to first principles. So what is the goal of a company? The goal of a company should be to maximize the total return to investors. Okay, so that's the problem, right? Like you're saying, okay, how do I maximize total return? Should I focus on like the operations of a business? Should I focus on structured finance, which I think is what digital credit issuers are doing? I do think that those are operating companies with products. Should I just stack Bitcoin? The answer could be different for everyone. Would there be enough space for every single company in the world to just drop their operating products and become structured finance Bitcoin treasury companies? The answer is no. Do I think that there could be more than there is today? Yes. And I could actually create more than there is today. And they could be very unique risk return profiles that are very different than Strive or Strategy. And so the question becomes, okay, like, do I think that, are we just trying to get rich? Well, yes, we're trying to maximize total return. Like 100%, we're all trying to get rich. Like whether you're doing an operating company or a company, like the fiduciary duty you have is to maximize value over the long run. So the answer to that is yes. Are you doing it efficiently? Yes. And I think sometimes maybe some of the frustration could even be in the fact that structured finance companies of Bitcoin that are letting the capital do the work, like it almost can seem like a cheat code. Like why aren't
it feels
you
like an unfair advantage? Yeah,
it's an unfair advantage, and I would say, like, in a certain sense, yes, it is. Like if you're bullish on Bitcoin, like people that are building Bitcoin companies that generate value to Bitcoin, that value accrues to our amplification. Like they're effectively working for our company, right? And we want to see them win, even the ones that don't like pure play treasury companies or don't like what we're doing. Like I want to see them win, because if they win, Bitcoin's likely more valuable. And so like I can see why there could be frustration, is like I had to hire 100 people and we had to do this, and you guys launch a preferred equity, you have amplification, and you've outperformed me. And now your company is worth $1 billion. That's frustrating. And I get the frustration behind that, but this, companies are competitive with each other. And we want to drive maximum total return. And I think that there will be, varying degrees of how you best do that for every company that has different, amounts of Bitcoin, different ability to raise money, different operations. There's no one size fits all. Every company shouldn't be a copy paste of Strategy. And I think sometimes that's what we saw maybe in Bitcoin Treasury Mania 1.0 is certain companies that didn't actually have a distinct vision. They just saw Strategy get rich. They tried to launch their own thing, where, we have always approached it from, how do we maximize total return? Can we do something different? Do we think it's interesting? Yes, but it's also flexible, right? When we first announced that we were going to become a Bitcoin treasury company, we talked about all these alpha opportunities, and they're still there. Digital credit was something that was emerging. We didn't realize that we were going to be in the perfect position to be a leader in digital credit, that the fact that we didn't take convertible notes would put us in as big of an advantageous position versus a lot of our peers. I mean, frankly, when we didn't take convertible notes, we thought the market wasn't going to like it, but it was just the right decision for us. So we just was like, okay, it's the right decision. And it ended up being something that put us in a bigger position to be a leader in digital credit than we expected, right? So the point is like, just make good decisions, keep your head down, maximize total return. The answer will be different for everyone, but I do think the answer will, for every company that's looking, should involve Bitcoin in some manner.
Yeah, I think that's fair. And I want to also, I guess, bring up this idea that I think maybe what people are getting into their minds is, well, hey, you're just all selling the same thing. But let me just, I was just having a quick research and looking around. If I look at how many banks are there on Earth, that number, depending on where you count, it's maybe like 9,000, right? There are 9,000 banks on earth. Are they offering the same product? Well, they've got different loans. They're offering different products. Or even if I took another example, how many companies do some kind of cola-style soft drink? Okay, obviously Coca-Cola and Pepsi are the dominant, global players, but there's like hundreds of them. Clearly, there is, there's room for many different, flavors, whether it's some kind of banking play, some kind of insurance play. Maybe there's thousands of insurers around the world, right? So do you think that's a fair analogy to make that, okay, if so, what are some of the ways these different, let's say, treasury companies who are focused on structured finance or quote unquote financial engineering, what are some of the ways that they can distinguish themselves from each other? What are some of the ways that they will differentiate?
Yeah, so I'll give you a couple different matrices that they could go in different directions. So I do think that's a very fair analogy of looking at whether it's the banking industry, the insurance industry, the asset management industry, that these financial companies, there's hundreds of them in any sector. And I would say banking's probably almost the one where sometimes they might look the most similar. Like, what's the difference between bank A versus bank B? And the answer tends to come into how they write loans, where they focus, how they look at risk versus return, and they generate different total returns. With regards to structured finance Bitcoin treasury companies, here's a couple different places where you can differentiate. They're easy. One would be amplification ratio. Different investors have different risk return matrices, different appetites for risk. So if you look at amplification, some might prefer 10%, some might prefer 20, some might be 30, 40, 50. And then, so that's just one way of just outright amplification ratio. Another would be, how do you think about generating income? Do you generate income on your Bitcoin? Do you sell covered calls? Like, I personally am not a fan of covered call selling. And the reason is I think that Bitcoin has massive positive convexity to the upside, and that covered call selling is likely to clip that upside. And we want to provide amplified Bitcoin exposure. But I'm well aware that covered call selling as an investment strategy is extremely popular. And with Bitcoin, it can generate really nice income. And so do I think someone providing some amplification with the covered call selling strategy would have interest? I absolutely do. Do I think we would have a better return than them? Total return? I do. But I think that it would be something that would have interest. How do you think about generating a yield on your Bitcoin? If you're thinking about generating a yield on your Bitcoin, there's many different ways that you could. You could look at things in, the lending space. You could look at things in the banking space. You could look at things in the insurance space. You could, there's infinite ways you could, option space. There's many ways you could think about generating a yield on your Bitcoin. They're all very different. And so just on those metrics alone, I think you're already talking about more differentiation than most people will be able to spell out around most banks in the banking industry. And so I think it's very early, and I think there's a lot of room for innovation. And a lot of these Bitcoin treasury companies, the newer ones that I don't think have laid out their plans yet, I'm sure they're not. I'm sure they're not sitting there doing nothing, right? They're strategizing, and it's going to be very interesting to see what they come up with over the course of the next year. And like I said, in the competition in the space, I want to see them succeed. I want to see us, eat their lunches with better total return.
Right. And I mean, to be fair as well, there's even the jurisdictional aspect of Bitcoin treasury companies in the USA are different to treasury companies in Japan or in the UK or Brazil or wherever. So that's also another differentiator that's out there. So let's talk a little bit about the growing interest in things like SATA and Stretch. So do you mind just kind of comparing them for listeners and commenting a little bit on the growth that we're seeing here in the interest in this?
Yeah. So first off, the growth is absolutely massive. So if you look at Stretch, I mean, it's trading massive volumes. It's north of par. But comparing, and then if you look at SATA, it also has massive volumes if you compare it on a per capita basis. So just like how the size of SATA versus
right, like pound
the
for pound,
trading volume.
Yeah.
And you'd actually see that SATA has superior liquidity relative to its size than Stretch. But on an outright basis, Stretch obviously has massive volumes because it's massively larger. But here's some of the differences. So SATA has a slightly higher interest rate than Stretch. We have a 12.25% interest rate, so higher than Stretch. They're both variable rate. So the companies, so Strive and Strategy, will adjust interest rate up or down depending on the range. And then the trading range that the companies have set for the two products are a little different. So Strategy, they set a trading range that they're trying to drive to over time of 99 to 101 with a target of 100. So a 2-point range. And right now it's within that range. Several times, throughout its history, it's been outside that range. And I think this is so early in the space, but it's going to be very fascinating to see how much volatility you can strip off of Bitcoin over time. Like, will Strategy be able to successfully maintain Stretch in a 99 to 101 range over time? I think that's an answer that is unknown at this point, right? I would almost say like for most investors, it probably doesn't matter because their coverage of the interest is so good that they're going to be able to pay the interest. I think the question just comes down to what will the actual volatility of this thing be over the next 10 years. And I think that's an unknown, and it should be an unknown at this point. Strive, given the fact that we have a higher interest rate, we're a smaller company, and we're at this point, I would say, unsure of how much volatility you'll successfully be able to strip off of Bitcoin in these products. We did a trading range of 95 to 105. And so if you actually look at that as a target, it still is very attractive on a vol basis relative to traditional high yield bonds. So that's the way I look at this, is that SATA and Stretch, SATA at 12.25% interest, that's almost double what high yield bonds are paying, right, on an interest basis. And I think potentially it could have less volatility than high yield bonds. Do I think that there will be massive interest for that? I do. Do I think that these need to be stable coins? I don't. I don't think that you need to take a 12% interest and say this thing's a stable coin. I think it's great that you're starting to see kind of the app layer on preferred equity. So you're starting to see some innovation of trying to take SATA and Stretch and turn them into stable coins at a little bit lower yield. And I do think that there are ways to strip down the vol of these even further to move in that direction. Everything is, from that perspective, everything's breakable, but this is not like, in my view, if it's done well, like for these app layers, this is not like a Luna or something like that, right? That's designed to blow up. I think the risk is like, can they successfully defend the peg? Not like, is the assets there? The assets are there. The coverage is there. The risk, the rating, the default risk on these, I think, are extremely low. So I think these are very attractive vehicles, but they're emerging, right? And so, SATA is trading at this recording about 97.5. So it's within our stated
Your
range,
band, yeah,
right? Already.
And just on the band, can you just explain what happens when it goes out of that band? Like, do you have a market maker or someone trying to go into the market to bring it back into the range, or is it more about adjusting the rate to try to keep it in there, or how do you do that?
Yeah, so it could be adjusting the rate. It could be capital markets activities. So like if it was going too high, we could issue more shares. But adjusting the rate's probably the primary function. And these are, for both companies, these are long-term ranges. And so, it's not overly concerning if, Bitcoin drops 20% and these things fall out of their range for a little bit. I actually don't think they need to as they get better understood, but do I think that is a problem? Not really. It just is, if it fall out of range and on the low side, we'd likely start to raise the interest rate to bring it back into range over time.
Yeah. And who do you see as the main, let's say, customer or user or investor in SATA? Is it, just people who want somewhere to park their money that's better than otherwise being in bonds? Is that how you see it?
Yeah,
or how do you see it?
Yeah, so this kind of gets into the question that you kind of hinted on earlier. It was focused on Bitcoin treasury companies or versus owning Bitcoin, but it's really digging into the unique investment needs of different people, right? So people in retirement age generally need income, right? And they have a desire for less volatility. If you're, whatever, let's say you're 70 years old and you're trying to think about, how do I survive for the next 20 years of my life or 25 years of my life? And you're saying, okay, well, do I want to take amplified Bitcoin exposure for my last, 25 years of my life? Like for most investors, I mean, if you're wealthy enough, maybe the answer is yes, because you're thinking about leaving money behind. But for most investors, they'll probably say no, right? Maybe some will want a little bit of it, but they're thinking about income. And so how can you generate a good income with a risk that you're comfortable with? And what we're seeing is a lot of people in, I would say, the 50 and above category, high net worth individuals that are looking at income that say, you know what? I like Bitcoin. I understand Bitcoin. I'm also a real estate investor and I have all these real estate properties, and the real estate properties, I have to, maintain them, and I earn a, whatever, a 5% yield, and I have to do a lot of work. And you're telling me I could sell that real estate property and I could buy SATA or I could buy Stretch and have minimal volatility and double the yield and no work, and it's return of capital, meaning it's tax deferred. They're like, sign me up for that all day. And so that's a big investor that we're seeing in that. We're also seeing people that have different accounts. And this also gets into, I think, one of the use cases for Bitcoin treasury companies is like, okay, like, should everyone own Bitcoin? Yes. Should people try to have it in self-custody? Yes. Although I think some boomers, I think might have more risk in that because they just don't understand technology. But like, is that a principle that we should support? Yes. But some people have 401k accounts. You can't buy Bitcoin. You could buy maybe a Bitcoin ETF. You could buy amplified Bitcoin. And if you're young and you're looking at, retiring in 20 years, 30 years, or 40 years, you might say, with my investment time horizon, I actually have the ability to compound and ride out, and I have money in accounts. Like Bitcoin treasury companies, I think that's like the pristine use case for them, for someone in that camp, because they want amplified Bitcoin exposure. And then you have people that, and I think this should be the base layer, is everybody has self-custodied Bitcoin to preserve your financial freedom into the future. But at a certain point, you probably have enough of that. Like, do you, like, how many Bitcoin do you need in self-custody before, you're kind of set for life from the financial freedom perspective? That answer will be different than everyone, but there's a level where you can start thinking about, your portfolio more holistically. And I think that's where these different products, this financial engineering, can come into play. And I think that's how you just take the base layer asset and you meet the different needs of different individuals.
And so when it comes to, as you were mentioning there are various pools of capital that either can't or won't directly buy Bitcoin, or maybe they can't buy, or they don't want to buy the common equity of one of these treasury companies. And I guess that's one aspect you're targeting. And then, of course, as you said, it's relatively unknown for now. There's a lot of people who are trying to chase some yield in, like, whether it's real estate, or they're trying to be like a dividend investor in like stocks, in like fiat stocks that don't have any Bitcoin. And for them, they aren't even aware that these products exist. And so I think that's kind of a big aspect of the education journey of like helping people understand, okay, this is a product that exists. So maybe you want to elaborate a little bit on the different pools of capital that are out there that can't just directly buy Bitcoin.
Yeah, so there's many. I'll give you some of the bigger ones, actually, because there's obviously people that have 401k accounts or whatever, or IRAs, that money is trapped. And yes, with an IRA, I'm guessing a lot of the Bitcoiners are aware you can do self-directed IRAs. You can buy Bitcoin directly. You can self-custody it. We've done that personally, but certain people are not comfortable with that. They don't have enough money for that. So 401ks and IRAs are a great example of kind of trapped capital that really can't buy Bitcoin directly. But then on the institutional side, this is where it gets, I think, more interesting, is there's many large pools of either fixed income portfolio managers or equity portfolio managers that are Bitcoin bulls, and their investment mandate is equity only. So if you have an equity only investment mandate, you can't even buy a Bitcoin ETF, right? Because that's not common equity of a company. And so if you're an actively managed equity portfolio manager, this is trillions of dollars, right? Trillions of dollar pools of capital. And I think most people are aware that there's a known portfolio manager at Capital Group, Mark Casey, that's like probably the best known figure that's doing this, right? Equity mandate, massive Bitcoin bull. He can't buy a Bitcoin ETF. He can't buy Bitcoin in his portfolio. So what's he doing? He's loading up on Bitcoin treasury companies, and he's crushing it, right? Like, and that's a massive pool of capital. Is that pool of capital going to change? That like no, these are institutional investors that are going to have equity mandates, and as we mature and as people in, I would say, the millennial and younger generation grow into these portfolio management roles, which is happening in our Bitcoin bulls and our Bitcoin native, you're going to see a lot of capital that just can't do things other than buy common equity. Or if you have a income mandate, you can't only buy income assets. So some could buy, whether it's, corporate bonds, some could, have preferred equity in that mandate. Some might buy the convertible notes. That there's going to be demand for these because people understand the risk and they have guidelines that limit them in what they can buy. And it's impossible to understate like how large these capital pools are, right? That are looking for an edge, and that these Bitcoin treasury companies provide a unique solution to them, right? And this kind of gets back into the reverse split conversation just quickly for Strive, is that we're talking trillions of dollars of pools of capital here that have these different mandates that are interested in opening up those doors. Why would you want to have a door closed to trillions of dollars of pools of capital? And so part of our mandate, to drive long-term value is to find these doors and open them. There's other doors that we haven't even opened yet, that strategy is opening as we go. Like, what are those doors? Well, with preferred equity, it's actually getting investment grade rated, right? Like Strategy got a B- rating. They're not investment grade yet, but S&P didn't even look at the Bitcoin, right? So like clearly like they gave them zero value for the Bitcoin. There's education to be done there. But as that happens, if you get these preferred equities investment grade, that opens trillions of dollars of capital through the door. That's a door to be opened as you develop a track record. So many investors require 3-year track records before you're investable, whether it's on the common equity side, whether it's on the preferred equity side. Some have 5-year mandates, right? Meeting those things, we're trying to open up every door, tell the story. And then as we do that, we're going to get larger and larger pools of capital. And we believe that'll drive Bitcoin yield for the investors that are already in the story.
So coming back to another, I guess, point of contention amongst, let's say, hardcore Bitcoiners, I think, and we've sort of been touching on this a little bit, but let me state it to you this way, and I'm curious to get your reaction, because I think there's a lot of Bitcoiners out there who maybe they came into it by buying Bitcoin on an exchange and withdrawing to self-custody, and that was their experience, and they believe that other people should be doing that too. And I think maybe over the last year or two, because of all the hype of treasury companies, and okay, yeah, maybe we're kind of in a lull now, but we're coming back out. But anyway, summarizing, I think in simple terms, many of them might believe that treasury companies and treasury equity have cannibalized, let's say, the normal demand for buying Bitcoin on chain and withdrawing. But maybe the other side of that coin is more like, no, it's actually growing the pie. So how would you see that, and how would you answer that idea? Like, are Bitcoin treasury companies, are they cannibalizing sort of on-chain use of Bitcoin, or is there a bigger picture here?
I think there's a bigger picture here, but I think the question becomes, how big do you think Bitcoin can be as an industry? And so I think a question becomes, do you always protect and preserve the ability for people to self-custody their Bitcoin as an option? And the answer should be yes. Hardcore Bitcoiners, 100% in that camp. I do not know a single leader of a Bitcoin treasury company that does not agree with that. And then the second question is, are you promoting and preserving the freedom for Bitcoin at the nation state level? And if the answer is yes, who's doing it? Like that's actually an important question. And ultimately, with what money? And ultimately, like the hardcore Bitcoiners are not funding that effort. They'll yell at Congress people on X, but there's a few people that are funding it. Like Jack Dorsey funds a lot of efforts there to a major degree. But you need effort. You need to promote and preserve those policies. And so I think Bitcoin treasury companies are massively additive in every single nation. And this is, I think, one of the key use cases in my view of bringing Bitcoin treasury companies to every nation, is to have a voice that's well capitalized in the room with the politicians to promote Bitcoin friendly policies. And I think that you need those people. And I think that we're aligned as a company. So that's kind of like the way that I think that this goes into the future. and pretty important to promote.
Yeah. So I think we've touched on a lot of things. I guess it's kind of the start of the year. Do you have any thoughts on where you think things will go this year? I know the last year has been kind of wild, right? Like with all the different things that have been happening. Do you have any thoughts or outlook on what's going to happen in Bitcoin this year in 2026?
Yeah, I think the fundamental equation for Bitcoin has never been stronger. Regulatory risk is at an all-time low. I think from a technical perspective, we seem to be working through some of the OG selling at this point. On some of the on-chain metrics, it looks like it's slowing down. And I think from a price chart perspective, which I view as like one piece of the mosaic, probably the least important piece of the mosaic, but a piece that is fun to talk about. I think all things point to limited downside from here for Bitcoin. Like, Bitcoin looks like it's breaking out as we speak, right? Like of a 2-year downtrend. I mean, it looks like this thing could just be rocket shipping in the near term. But let's say that doesn't play out for whatever reason. I don't think we break 60K. Or if we do, it's like for like a one. So if your downside in Bitcoin is like 40%, let's just say, which in traditional assets is a lot, but like, I think this is low probability, but I think it's always important to look at downside versus upside. What's the upside? I mean, this thing going to, $1 million plus over the next several years is my view. And whatever with the average compound rate of 30% or so, this is going to be one of the best risk-adjusted return opportunities you will have to buy into Bitcoin right now. Even if you think there's some chance that it goes to 60K, because I think that's a somewhat of a tell chance, but a chance. And if you think that we're more likely to go up this year and definitely years into the future, it's much easier to invest now from a total return perspective, risk-adjusted return perspective, than if Bitcoin's at 300K or 350K, because it becomes more difficult to estimate what the downside would be in a bear market. And right now, I think we're right around high levels of support. Chart looks bullish, fundamentals look bullish, everything that I think reasonable looks bullish. This is the best time to go out the risk curve, in my view. And I think everything that's happening geopolitically, these are all bullish tailwinds to Bitcoin. I mean, it really is like fourth turning stuff that we're seeing right now with Venezuela and Iran and, the Federal Reserve and, Powell making the statements that he's making, which I think are silly, and I don't have sympathy for him, but whatever, trying to get people to believe that the Fed is independent still, and then all the central bankers around the world, issuing statements of support, which I think fall flat.
It's quite sus, yeah.
But anyways, these things that are happening, you're seeing the backdrop for what Bitcoin was built for continue to play out, right? Doge has failed. And so it's like, I think this is a time when you want to be max long Bitcoin exposure, which is like, I announced today, I bought a bunch of ASST stock. Why did I do that? I did that because I want to be max long risk right now, for the next, 5-10 years. And I think, obviously I think I'm biased, but I think our stock is the best way to do that. But the point is, it's hard to find a better risk return scenario than you have right now. And I think you want to be out the risk curve.
Yeah, I think there's so many bullish factors for Bitcoin right now, the broader industry. And, we're seeing development in all these different areas, whether it's treasury company stuff, whether it's L2s and payment stuff, whether it's medium of exchange, and just all these aspects of it. So, I'm quite bullish. I think we should see this as, hey, a rising tide is lifting all boats. So I think, I'm excited to see what happens over this year. So yeah, look, thanks for joining me. Listeners, check out strive.com and you can follow Cole on X. His handle is @ColeMacro. Links will be in the show notes as always. Thank you, Matt, for joining me on the show today.
This was fun. Thanks for having me.